Last week, there was a drastic change in market sentiment. Traders factored in the Fed's hawkish statements. As a result, Wall Street investors got rid of some shares. At the same time, the US dollar rose significantly across the board. The US dollar index, which measures the strength of the greenback against a basket of 6 major currencies, managed to grow above the level of 97 for the first time since July 2020. Its weekly gain totaled 1.66%, the highest since June of the last year. Traders are expecting the key rate hike in March. They also took notice of the Fed's hints about more than one rate hike. The regulator is now ready to tighten monetary policy amid the buoyant recovery of the U.S. economy. According to reports released last week, the U.S. economy expanded to 6.9% in the fourth quarter. The central bank took this as a signal for taking a hawkish stance. The euro dropped the most due to the US dollar's rally. The euro-dollar pair closed the week dropping by 1.7% and breaking out of a multi-month sideways channel. The euro hit its lowest level since June 2020. The eurozone economy seems to slow down, whereas the US economy is getting stronger. Besides, the possibility of the conflict in Ukraine undermined demand for the euro. The pound versus dollar pair slipped by 1.18%, approaching the lowest level since December. Apart from that, the Bank of England is likely to raise the interest rate one more time. However, the pound sterling is weak because of political uncertainty in the UK. Prime Minister Boris Johnson is awaiting the investigation results into the breaching of self-isolation rules during quarantine of 2020. Meanwhile, crypto traders remain optimistic. Analysts believe that Bitcoin is likely to soar to the all-time high during 2022. The recent fall is viewed as a deep correction. Given the volatility of the asset, it's safe to say that this instrument is not suitable for jittery traders. Now Bitcoin is heading to the level of $38,000. Over the week, it rose by 7%, rebounding from a 7-month low. Oil prices edged higher despite the strengthening of the U.S. currency. Brent crude climbed above $91 per barrel, returning to the levels of 2014. The shortage of supply and a moderate increase in production output by the main oil producers kept oil prices at a high level. The next OPEC Plus meeting will be held on February the 2nd. The group is expected to boost production in March by 400,000 barrels per day. Oil prices also jumped amid geopolitical tensions in Eastern Europe involving Russia, the second largest oil producer and a key gas supplier to Europe. Apart from that, there is a possibility of supply disruptions in the Middle East. Gold as a safe haven asset returned to its previous levels due to geopolitical factors and risk aversion. It has been trapped for weeks in the sideways range of $1,830 and $1,780 per troy ounce. It lost its 2-week gains following the US dollar's rally and high demand for US treasuries. You've watched the combined financial review on Insta TV with me, Anna Kasatkina. Stay tuned.